You don't need a PhD in economics to understand what's happening. You don't need inside connections at Wall Street. All you need is eyes. Because right now, the financial system is showing you, in real time, exactly why gold and silver were built for this moment. On one side of the world, stock markets are crashing. Japan and South Korea have seen days where their markets dropped like stones. Asian investors are scrambling for safety. In the Middle East, tensions are exploding. Oil routes are at risk. Embassies are closing. Governments are quietly moving capital behind the scenes. And then you look at Israel's stock market, hitting bizarre highs at the exact same time war risk is off the charts. Does that feel normal to you? Or does it feel like we're living through something designed, not accidental? Meanwhile, gold and silver just sit there. No earnings calls. No accounting tricks. No government press conference can print more of them. That's why in this video we're going to cover why physical gold and silver are purpose-built safe harbors in exactly this kind of chaos. The huge cup and handle pattern that's been quietly forming in gold and silver for years. Jane Street's controversial $1.3 billion silver bet and what it really means. A looming silver shortage and supply crunch that major investors are talking about right now. And why central banks, corporations, and ordinary people are all beginning to move in the same direction, out of paper promises into real metal. You can see this happening if you know where to look. Before we dive deep, let me be very clear. This video is for information and education only. I'm not telling you to buy or sell anything. I'm not your financial advisor. Do not make any decision, financial, investment, or otherwise, just because you heard something on YouTube. I don't want your trading account. I don't want your leverage. I'm here to help you understand what's going on so you can think for yourself. If you like that approach, real talk about gold, silver, and this crazy system we live in, then hit like so more people see it. Subscribe and turn on notifications so you don't miss future updates. And in the comments, tell me one thing. Where are you watching from, and are you stacking gold, silver, or both right now? Your answers help me tailor future videos to what you actually need. Let's zoom out and look at the big picture. We are living in a moment of unprecedented volatility. Asian markets have seen brutal down days. Currency swings are hitting levels most traders have never experienced. Bond markets are flashing stress, with yields jumping and government borrowing exploding. At the same time, the Israeli stock market, in the middle of war risk, missile threats, and political turmoil, has been pushed to strange, elevated levels. Ask yourself, does that feel like real price discovery? Or does it feel like central banks, sovereign wealth funds, and major institutions are trying to hold up certain markets to project confidence? Meanwhile, in the background, global debt continues to surge. The U.S. national debt is marching past $35 trillion. Worldwide, we're approaching $300 trillion in total debt obligations. There is no realistic way to pay this back honestly. Everyone knows it. Every serious analyst understands the only path forward is inflate it away, devalue the currency, quietly shift from promises to things that are real. That's why central banks are buying record amounts of gold. That's why smart money is moving into silver. Because in a world of crazy charts, manipulated yields, and political theater, gold and silver are the simplest statement you can make. I don't trust your promises. I trust something you can't print. Let's talk charts for a moment, but in plain language. If you pull up a long-term chart of gold, going back years, what you see is a massive cup and handle pattern forming. The cup is that broad, rounded base, where price came up to previous highs, pulled back, and then returned to test them again. The handle is the recent consolidation, the sideways, slightly downward drift after those highs. Silver has a similar shape, though more volatile. Big spike up years ago, long, frustrating sideways base, recent thrust higher into multi-year highs. And now a pullback, sideways action that looks suspiciously like the handle portion of a launch pattern. Cup and handle patterns are powerful because they represent time plus frustration. Time, markets had years to distribute weak hands and bring in stronger holders. Frustration, everyone who bought the old highs and gave up on the pullbacks is gone. When that handle finally breaks to the upside, there's often very little resistance left. Almost no one is left to sell. Add to that, gold already broke to new nominal highs recently. Silver, historically more volatile, tends to be late but violent when it follows. In other words, gold has already shown the breakout signal. Silver is still in the handle, with massive energy building underneath. Now let's talk about one of the most controversial pieces of this story, Jane Street. Jane Street isn't some TikTok trader. They are one of the largest proprietary trading firms in the world, a quiet giant that moves billions through global markets every single day. Recently, data revealed that Jane Street amassed a position of around $1.3 billion worth of silver exposure, primarily through the SLV ETF and related instruments. That made them the largest holder of SLV, with more silver exposure on their books than many entire countries' annual mine production. Why does that matter? Because this is the same Jane Street that has been linked to high-frequency trading strategies that push prices aggressively at set times. Coordinated selling in other assets, for example, consistent Bitcoin selling at 10 a.m. on multiple days during key declines, as some researchers have documented. So when a firm with that reputation loads up on over $1 billion of silver exposure, you have to ask, are they just investing? Or are they positioning themselves to be at the center of the next engineered volatility event? Think about it. If you hold that much silver and you have the technology to move prices rapidly using futures and options, you can create the dips that let you accumulate more and amplify the rallies that let you profit from options and structured trades. Is that what's happening? We can't say for sure, but the constellation of facts is there. Record volatility in silver, massive SLV position at a sophisticated trading firm, growing evidence that price is being managed rather than discovered. For us as regular people, the key is not to fight Jane Street tick for tick. It's to understand that their long exposure in that size is a message. They do not believe silver is done. You don't risk $1.3 billion on a market you think is going to sleep for a decade. Now let's move from trading desks to mines. One phrase keeps coming up from serious resource investors and commentators. There is no silver. What do they mean? They mean new large silver discoveries are rare. Most silver today is produced as a byproduct of mining other metals, like lead, zinc, copper. Primary silver mines, companies that mine silver as their main metal, are relatively few, and many are struggling with cost inflation and permitting. At the same time, demand from solar panels, EVs, and electronics is accelerating. Investment demand is rising as people lose faith in fiat currency. Silver scrap recovery isn't enough to fill the gap. People like Rick Rule, Keith Neumeyer, and other mining veterans have been warning about this for years. If the price stays too low for too long, miners stop exploring. They stop building new projects. They squeeze existing assets just to survive. You can't fix that crisis overnight by raising price. You can't go from underinvestment to new mine online in a year or two. These projects often take 7-15 years from discovery to production. So if we arrive at a moment where investment demand spikes, industrial demand keeps growing, inventories at exchanges and refiners are drawn down, we can't just conjure new silver out of thin air. The only lever left is price. Price has to move high enough to slow down demand at the margin, make marginal projects economic, and reward the companies willing to take the risk to find and mine more. That's why when people talk about triple-digit silver, they're not just fantasizing. They're looking at a structural supply problem colliding with financial chaos. Now let's look at what the biggest players in the financial system are doing. Central banks. For decades, central banks did one thing with reserves: buy U.S. Treasuries, park their wealth in dollar-denominated debt. That era is ending. In the last few years, central banks have been net sellers of treasuries in some regions, massive buyers of gold at levels we haven't seen since the 1960s and 1970s. Why? Because they can see endless money printing, weaponized currencies and sanctions, political risk around holding too much of any one country's IOUs. Gold is politically neutral. Gold is nobody's liability. And while central banks are not yet openly buying silver the same way, there's a knock-on effect. As gold gets hoarded and repriced higher, silver, historically the second monetary metal, tends to follow as retail, institutions, and eventually corporates look for affordable hard asset hedges. We've already seen the first publicly traded company announce that it's adding physical silver to its treasury in 2026. That's a quiet but massive signal of what's coming next. When central banks move first into gold and corporations begin to follow into gold and silver, you and I have a simple choice: stand still in fiat or front-run the trend into metal. Let's bring all of this together. Gold and silver are not perfect. They don't generate cash flow like a business. They don't send you dividends, but they do something no stock, bond, or digital token can do. They sit outside the financial system. No CEO can dilute them. No central bank can print them. No politician can vote them into existence. In a world where debt is spiraling, wars are simmering, markets are being held up by intervention, trading firms engineer volatility in paper markets. Gold and silver are simple. That's their superpower. They're not investments in the usual sense. They're insurance, wealth denominators, anchors. You don't buy a fire extinguisher hoping for a fire. You buy it because you know that if chaos shows up, you'll be glad you had it. It's the same with metal. If nothing goes wrong, fine. If things do go wrong, you've got something real in your hand while everyone else is arguing about yield curves on a screen. So, with all this information, what can an ordinary person actually do? Again, not advice, just a framework. Educate yourself, not just on price, but on structure. Learn the difference between spot, futures, ETFs, and physical. Understand that SLV is not the same thing as coins in your hand. Decide your role. Are you a trader? Then manage risk tightly. Volatility will eat you alive. Are you a saver, totter, stacker? Then focus on ounces and long-term stability, not daily price drama. Diversify within precious metals if it fits your plan. Some people hold only physical. Some add quality miners for leverage, accepting more risk. Some mix gold and silver to balance volatility and stability. Watch the signals that matter. Exchange inventories, Eastern versus Western price differentials, central bank gold purchases, corporate treasury announcements, or large ETF position changes. Stay emotionally prepared. There will be more smash days. There will be more green days that feel like euphoria. Your edge is emotional stability, not guessing every move. If you walk away with one idea from this video, let it be this. You can see what's happening. It's not hidden. It's not a secret club. You can see markets being propped up when everything says they should be falling. You can see central banks buying gold hand over fist. You can see giant trading firms loading up on silver exposure. You can see that no amount of political speeches has ever printed a single ounce of metal. Gold and silver are telling you the truth that the rest of the system tries to hide. If this resonated with you, hit like so more people wake up before the next wave hits. Subscribe and turn on the bell. I'll keep bringing you straight talk on gold, silver, and the bigger picture we're all living through. Drop a comment with one word that describes how you feel about the system right now. Confused, alert, or preparing. Remember, you don't have to predict the future perfectly. You just have to see clearly enough to stop playing a rigged game with blindfolds on and start building a foundation under your own feet. Stay safe, stay informed, and I'll see you in the next one.